There are over 20 S&P 500 stocks reporting earnings on Tuesday, February 10th, and I'm going to look at 8 of them that are common for retail traders to either be directly involved in, have in their portfolio, maybe their dividend plays, and more. So we're going to look at price action, market timing, momentum, because I'm human ready, and that's what I do. So let's start with KO, Coca-Cola. So this stock has been trending higher since early January, most recently peaked in the bull resistance power zone and has paused. If you are long this stock, I would keep an eye on today's low. And if we start to break below it and continue, I would maybe look to exit any long positions and protect, looking for a pullback. I think bigger picture, if there is continued weakness, we could pull back towards the $73 area before resuming higher. Let's go to a weekly chart to see, are we at new highs, or is this, trading up against historical levels? It looks to be like new highs. So the next upside target would be the $90 area over coming months. All right, F, ticker Ford. This is on the weekly chart to begin with. You can see there's a barrier here at $14.85 per share that has not been exceeded. And if it does, it could allow this stock to start to make its way back towards $20 per share. So right now it's consolidating. Bring that down to a daily chart. You can see that consolidation is being held by the November 20th low. So look to buy on any dips while above the November 20th low. All right, CVS. It is in a major sideways range between the September 8th and October 29th levels. So this is a stock that if it can put in a nice base here. So a base doesn't have to be at the bottom of a chart. It can also be midair, if you will. But when it's after an uptrend, if this turns out to see some resistance breakout, then that could mean that this is sort of part way through a move. So that what you could do is take the size of the previous move, the size of this advance from July, and look at it as a target for a breakout higher. So that would bring us definitely above $100 a share if that occurred. So what I'm talking specifically about is watching for a move back above the October 29th high. Will earnings fuel it? Maybe, maybe not. But it's what to look for in not just the day of earnings release, but the days and weeks after it. On the flip side, if we get close below that September 8th low, I'd watch out for a deeper pullback toward the $65 area. Now, SPGI, this is a higher price stock. It is back near the low from April 2025 and trying to stabilize. When you look at that back on a daily chart, you can see that it's in extremely overbought conditions, again, specific to the April 7th daily chart range. If this stock can climb above the February 5th high, I think it might be on a decent recovery path higher towards $520 per share. Ticker GILD, Gilead Sciences. This is extended up and to the right, but it doesn't really have any sign that the party's over. Sure, the RSI has pushed into the bull resistance power zone, but right now, as of midday on Monday, February 9th, we are forming an inside bar, meaning a lower high and a higher low than the previous session's candle. So we need to see what comes of it. This is like a contraction of volatility before a potential increase in explosion of volatility. So it may be a great place to raise your stops. I would raise stops to below the February 5th low if you have any sort of longs in place from prior to that. Now, AIG, this is back on the weekly chart. You can see it traded down back towards the January 2025 range and has been attempting recovery higher since January 23rd of this year. Now, all of this is with the RSI relieving itself of oversold conditions, and it has yet to reclaim even 50% of its most recent decline. 50% is not always a resistance level to monitor, but it's definitely a helpful one, especially when it coincides with past traded action. You can see that it does here. It's very close to the January 8th high. So there's room for this stock to recover back towards the 50% retracement near the January 9th high. But if it falls out of bed before that, I'd watch out for a move below February 3rd to kind of reset bears for a move down towards $68 potentially. Okay, MAR, this is Marriott Hotels, and it's had a nice steady uptrend. Every time it came back to the bull support power zone, it's been having a beautiful resumption higher. So if you are not using my RSI Power Zones momentum indicator, I truly believe you're likely missing out on a lot of trend moves, whether that's starting your education with my Winning RSI Playbook or Bull Bear RSI Face-Off ebook just to kind of get your feet wet, or diving in with my 4 Zones RSI coverage system, or for true mastery, the advanced RSI Power Zone system. So right now what I see is a resumption higher. I think this is likely to take this stock out towards the 360 area over coming months while it stays above the January 28th low. And last but not least, DUK, Duke Energy. So this stock's been recovering since October, or December 10th rather, and has reclaimed, looks like, over half of the fall from the high that it put in October. Now notice this. It has come back and tested that level, okay? But notice how it has not been able to maintain 2 days of closing price values above it in a sizable way, like a big green candle, right? We had this little tiny body, this tiny body, and then a red candle bring it back down. So what this tells me is that while in the short term, the 50% level has been reached, it's not able to be fully overcome. So short-term bulls are having a problem there. So what I'd watch for is the support that's at the February 2nd low. If these shares fall below that, I think we might see a return back to the December 11th range. If they keep trucking on higher, then I would look for a return to 130 over coming weeks. All right, so that's a look at stocks that are reporting earnings February 10th. If you got some useful takeaways about how to manage maybe what's in your portfolio or keep an eye on things to add or delete, or a reminder of the importance of the awesome 50% retracement, go ahead and hit that like button and I'll see you in the next video.